Right. Good evening, everyone. Okay, welcome to a new week, and of course, welcome for joining in today as well. Okay, so we'll get started. But before we do, just do a very quick introduction to share with those of you who are perhaps first time over here joining us. Okay, so what we do over here is every Monday, we run a session like that, where at the first part of this session here, I'll break down and share with you some of the opportunities that you want to keep an eye on for the week. Okay, and with that, we'll take up maybe about 15 to 20 minutes, and then after that, I will open up the remaining time here for you guys to actually ask questions. Or if let's say you have any particular instrument that you'd like me to share an opinion on, you'll be able to actually interact from there as well. Okay, so we have that Q&A over there as well. Okay, so let's get started for this week. Okay, so first up over here, I'll bring you to, in terms of Forex and FX side, I'll bring you over to, of course, the calendar to give you an overview what we need to kind of like take note of. Okay, I don't really trade the news specifically, but I think it's good to have an overview what you need to take note of in terms of some of the risk events, some of the volatility that's going to come in during this period of time. Okay, so today is Monday, so it's relatively quiet. There's no any economic data that's coming out. Tomorrow, Tuesday, we do have the CPI and core CPI from the US. I think this is pretty important to a certain extent because the Fed is monitoring inflation, of course, and CPI and core CPI over here is an inflationary data. Okay, so that might give a little bit of a volatility into the market during that period of time. However, I don't think it's gonna be like a major shakeout in the market. Okay, unless core CPI and CPI really breaks through the roof, right? So you can see over here they're expecting like 0.5, 0.4. So if let's say this jumps in like 1 point something, then of course we'll have a very huge market volatility because that's a huge surprise to the upside. Okay, but other than that, I don't think it's too much of a concern. Just take note of that. Okay, and of course we do have RBNZ rate statement over here, and for me, I don't think there's gonna be a big mover in the market. Okay, unlikely RBNZ is gonna change their cash rate or interest rate, but generally just take note of it. Okay, keep an eye on what's the update. And later part on Wednesday, we do have the BOC rate statement. Okay, so I think same thing over here. Unlikely they're gonna change the interest rate, but do keep an eye on. In terms of what is likely going to be reported, right? That will be crucial. And after that, remaining of the week is rather quiet from here on. Okay, so I think most of the events are likely going to be on Tuesday and Wednesday itself. Okay, yeah? So that's an overview of what are some of the events you probably want to take note of. Okay, so with that, let me jump over to the technical side for the week. Okay, so let's take a look at the US dollar for now. Based on the charts that's presenting over here on the 4-hour time frame, okay, we are seeing kind of like a diagonal setup over here, which is what we call a crawl and a potential reversal pattern. So there's a good chance that we're gonna continue to see some weakness in the DXY, the US dollar over here. And of course, there's a good chance this will continue falling towards somewhere around 91.5. And this presents perhaps a short-term trade to the downside for some of you. Okay, and of course you might not trade the dollar index directly, but if you take a look at some of the major pairs, if the dollar is weakening, of course you'll be able to kind of like take advantage of that in some of the major pairs too. Okay, so this is my view for DXY. I think as long as price remains, I would say below, okay, this structure level here around 92.80. Sorry, that was a typo over there. So this one here is 92.80. Okay, as long as price remains below this zone, there's a good chance we'll continue to see it weakening towards 91.50. Okay, so that's my overall view on the dollar. Okay, and of course with that, we do have a couple of major pairs you can keep an eye on for the week. Okay, so you have like euro dollar over here, of course. If you flip it, inverse it, okay, if the dollar is likely going to weaken, then naturally, if you are looking at euro dollar here, you can take a look at a potential buy short term, very short term, towards an area of 1.1975, right? And once price tag this area here, you want to be very careful. Okay, I would even suggest if you're looking for buy, once price hits around 1.1975, just take profit, exit the position, right? If that's what's going to happen in market. Okay, so short term over here, you do have that opportunity to look for euro dollar to the upside. Very straightforward, right? I think because dollar here we're looking at weakness, so if you look at some of the major pairs, the direction are more or less already quite straightforward. Okay, but this move up is going to be very short term, because then likely this is where this can develop into something like that and it continue falling after that. Of course, it does not need to come back up to 1.1975, but if you're looking for a short-term trade, the buy side is where you want to pay attention to. Okay. The other one is of course Aussie dollar. Okay, so you can see a little bit of a flip here that I did early this morning. Okay, but having said that, that is a good opportunity that you can keep an eye on in terms of Aussie dollar for the upside. Okay, of course, you do need to have your own strategy as well, right? It cannot be just, you know, I say the direction up and then immediately you jump in and buy. Because you need to time your entry, you need to know when is the best time for you, for your style to enter a trade. And of course, you need to know where to put your stops and things like that. Okay, so over here, in terms of Aussie dollar, you can look for a short-term upside. Maybe you want to go and take a look at like maybe an hour time frame, 4-hour time frame. But you know, you need to have your strategy as I mentioned again. Okay, so over here you can maybe wait for a potential maybe double bottom. Okay, you can wait for this to form a flag, something like that, a sideways move, and then you take the breakout, or you can take for a retracement trade. There are many ways to actually execute and get involved. Okay, the idea over here is more of like to share with you, okay, what you can potentially keep an eye on, so that you do not need to go through the entire list. But at the end of the day, you really still need to have your own personalized strategy. Okay, so Aussie dollar short term, you can look for the buy. Euro dollar short term, you can look for the buy. Short term here, I'm referring to like if you're trading maybe 1 hour time frame, 4-hour time frame, that's around there. And when I mean short term is again maybe, you know, when you get involved in that trade, likely it's gonna be either an intraday or maybe at most like 1 or 2 days, and then that's it, right? You get an outcome, you get out of the trade. Okay, so that's what I mean by short term. Okay, Kiwi dollar over here, which is pretty similar to Aussie dollar, right? You can see it's not that clear right now. But of course, there are again many ways you can get involved. Maybe from here, if it starts to come back down very slow, okay, and then that would form that 1 hour mini double bottom for the trade to the upside as well. Then you can even take a look at this as a potential neckline, right? So again, they're quite a good one to keep an eye on. But of course, this is definitely not a trade you buy now. Okay, same thing for Aussie dollar. This is not a trade I will buy now, right? Because this can easily just come down, and then that forms what we usually call a V-shaped formation. Okay, so it's not a buy trade now, but it's an opportunity that we can keep an eye on for the week to come, right? For the next few days, that might be where the opportunity comes. Okay, same thing in the dollar CAD. There might be a short-term opportunity where this forms a flag like that, a correction. Then you might get one more push to the downside. Okay, potentially maybe this region here or even lower. Okay, so the idea is you might get a short-term push to the downside like that. Okay, same thing. This is likely gonna be a very short-term trade when it happens. Okay, so if let's say today you're someone who is more of like a swing style where you're not looking for that small little move in the market, then this opportunity here, of course, it will not probably be of interest to you. Okay, you probably would like to just let it go, right? And look for other opportunity. Okay, so the dollar trades here are more of like short term. Okay, for those of you who are more interested into like intraday perspective. Okay, just look out for an entry that fits your style, then you'll be able to look at it. Okay, the other pair here I have in mind and in my watch list, okay, is dollar franc. Now dollar franc is a little bit different. While we're looking at the dollar weakness this week, I'm looking at dollar franc for potential reversal instead. Okay, the reason is more of I'm seeing over here as a 5-wave move to the upside, right? That completes an Elliott Wave impulse push, And we do have this 3-wave push here as well, and right now we have kind of like retest our wave 4 territory. So usually that's where the correction would terminate, right, from Elliott Wave perspective. And from here, it has a good chance that this can bounce back up, right? But of course, we definitely need to see how price develop from here onwards for the next maybe 2 days or so, okay? Which means that maybe by tomorrow or Wednesday, depending on how price develop, we might have a much better idea where will price likely head towards. Okay? So the idea is that if price were to do a correction that looks something like that, then of course it will be a very solid opportunity to look for upside. Okay, then you have this mini kind of like bottoming formation here as well. You have this crawl pattern, you have this 3-wave correction as an Elliott wave count as well. So if that happened, then I'll be very interested in the upside. But until then, okay, I will not be focusing so much on the sell, because this correction here is basically still testing this structure, right? This wave 4 level. However, if this were to break down strongly as an impulse and then it starts to form maybe a mini correction down here, then yep, I would rotate my bias and I'll be focusing more on the downside from there, right? But until that happens, I'll be more interested in the upside for dollar franc specifically. Okay, so that's on dollar franc. So those are some of the major pairs, right? Most of them are, I would say, intraday opportunities. Dollar franc has a potential swing trade, but we need to give it a couple of more days, right? Maybe until Wednesday, then we get a better picture on that. Other than that, most of these yen pairs, right? I would say just don't touch it. In fact, all the yen pairs, you probably would not want to touch it, except if you want to monitor. You can keep an eye on Swiss yen. Okay, so in terms of Swiss yen over here, we have this key high around 121. Okay, it's a psychological number as well, which is usually kind of like a natural support resistance level. Okay, so keep an eye on 121. We are pretty much 60 pips away from there. So there's a good chance price will continue heading towards 121. You can see the momentum is there. Okay. But the question more is to ask ourselves, you know, when price starts to develop closer to 121, how is it developing, right? The idea is that if let's say this starts to form maybe kind of like a crawl formation, right? If I were to take some very quick reference, it will be probably something like that. Okay. If this were to develop over here, right, you can see where I took it. A pattern tends to repeat itself. Okay, so if this is something like that, then I'll be more interested in, of course, the reversal. Okay, then what you have is a very good kind of like impulse correction, and then you expect one more push to the downside, which means then 121 level would be a very good area for us to keep an eye for a sell. Okay, for a sell opportunity. However, if let's say, you know, price actually broke it off pretty strongly, okay, and again, what I mean by that, if I were to just take this here, you know, and then put this over, and let's say, you know, it does something like that, okay, and then after it does it, okay, maybe, you know, it forms something like that, okay, that's where I wouldn't be looking for the sell, obviously, okay, because why? The momentum is to the upside. We see a correction over here that broke above this, so we are definitely looking more for upside if that happens, okay. So again, you can see where I took all this. Patterns tends to repeat itself, and essentially that's what technical analysis is, right? You're basically just looking out for repeatable patterns to explore in them. Okay, so if that were to happen, then your potential next target is around 122.75, which is this previous high. Okay, so I think of all yen pairs, Swiss yen would be the one that, you know, if you really want to trade the yens, okay, Swiss yen would be probably the only one pair that I say is really worth considering, right? The rest of it, they're doing what we call a V-shaped formation, which is more or less something like that, okay? Or even, you know, something like that. So that's what we call V-shape. Every time I see that, I'll just leave that chart alone. Okay, give it time to develop, and then only I'll come back after that. Okay, so these are some of the few ones to keep an eye for the week. I think Kiwi franc is something that you want to keep an eye on as well. There's an opportunity. But it really depends on how price develop from here onwards, right? Because today is Monday, things can change along the week, okay? And so you need to be aware of that as well. So in terms of Kiwi franc over here, what we are looking out is a potential buy opportunity, right? So you can see this is pretty much coming down as a correction. So we are more interested in the upside, right? So with that in mind, it's more of like asking the question is, when is the best time, or when is a better time to get involved in, right? Or what price is a better price to get involved in such a way that my risk to reward is worthwhile, my risk is not too wide, and all these things in place. So in terms of Kiwi franc right now, obviously this is not a buy call, this is not a buy trade. But I think, with, let's zoom out a little bit, right? With this bottom here that has formed last Friday, you can see how this has been tested a couple of times, right? Of course, not like ideal, perfect touch, but you can see roughly here, right? It has came down a couple of times and it have like retested that, and that level is being supported as of now. Okay, so there is a good chance that if, let's say, this were to form maybe a correction here, we might get that push higher. Okay, that would be a good setup to take the buy, or this can maybe take some time to develop something like that. Okay, coming down, maybe forming a double bottom formation. That would be also a very good opportunity to take the buy. Yeah, right? Or if, let's say, this just keep pushing up, of course you still then want to wait for kind of like a flag, a correction, and then you take the buy. Okay, so that's what I'm waiting for. Okay, you need to wait for a decent setup before you get involved in. Okay, so over here I'm sharing with you the direction and the pair that you can put in your watch list to help you kind of like focus on this selected opportunities for this week. Okay, so Kiwi franc is definitely one of them that you want to keep a close watch. Okay, Aussie CAD here is also a potential one that we can keep an eye on. I'm looking at this obviously. Okay, so you can see where we are. Okay, we are currently back at this low here, which was back in October, okay, last year. Okay, so we are currently retesting that. Okay, so that's where the context is, right? And we are definitely looking more on the upside because of how this pattern is pretty slow. Okay, so again, every time we see something like that, we're more interested in the upside. For our time frame, okay, this is where I'm seeing this is potentially maybe a double bottom over here, and then we get a small mini push. And right now we are looking at this as a potential correction, and from there this can continue higher. Okay, so I'm a little bit patient. I'm giving it until maybe tomorrow, even Wednesday, to see if I can take a trade to the upside. Of course, you can even consider like 1 hour time frame. Same thing over here. You can wait for this impulse and then a small correction at the top over here. That can be this trade or the setup to take. Okay. Alternatively, of course, this can come down like that, and then this forms that 1 hour mini bottom, double bottom formation, and then this can still push back up. Okay, so of course, I won't know exactly which would happen, but I can only share with you what we can see today, right? And as price continue to develop along the way throughout this week, then that's where you probably would be able to see what is likely going to develop, and then from there, hopefully you have a plan to execute it. Then that will be a very good trade. Okay, so these are the few pairs I think in terms of FX side you want to really pay attention to. The other one is on EURAUD. Okay, however, EURAUD I'm already in one trade running this morning. Okay, but I want to share with you that there is still decent opportunity for you guys to keep an eye on. Okay, the direction I'm focusing on is to the downside, right? So you can see on here, this is the daily time frame. This pattern again always suggests there's a high chance that it will likely continue falling. Okay, so that's where my directional bias on EURAUD is rather straightforward. I'll be focusing on the sell side, and of course 4 hour, I did take a trade on the 1 hour this morning. Okay, it's really very straightforward, right? You have this kind of topping formation, price broke this, and then of course we kind of like take the retracement, right? This is what we call a retracement trade. However, don't jump and chase the market right now. Okay, if let's say you're interested in this, maybe what you want to wait out for is until maybe tomorrow or Wednesday, and if this forms kind of like a flag formation like that, then that is where you get this push correction, and then you can take this trade down. Okay, So yeah, of course you need to have your own strategy. You might even look out for, maybe some of you use certain indicators, some of you use maybe certain different patterns, candlestick formation, right? The idea here again, you probably need to have your own proper strategy. Yeah. So hope that helps, right? It's not just about like I'm looking to sell and then you sell it today, right? That will not work out. Okay. So yeah, so EUROAUD definitely a pair you want to keep an eye on as well. Okay, so definitely there are a few opportunities this week, right? From short term perspective, where you look at the major pairs, and then of course we do have swing style here as well, where you have EUROAUD, dollar franc, franc JPY, Kiwi franc, and of course some Aussie CAD. These are more of like the swing style higher time frame. Okay, yeah. So those are the FX side of things. In terms of gold, okay, for the past 2 weeks, I've been always saying, just give it time, give it time, give it time. Honestly, from what I'm seeing over here right now, do the same. Okay, give it time. Okay, and don't touch it, because it's again still not clear, and it's really just range bound, right? So even if you try to trade this particular asset for the past 2 weeks, it's not easy to profit from it because it's really not moving much. Okay, and every time when market is in this kind of environment, you do not want to be a trade, because then you psychologically and emotionally, it's not gonna be easy for you. Okay, so that's something that you want to take note of. So gold here, I would suggest just leave it out. Okay, don't touch it for now. Okay, crypto has an early pop this morning. Okay. However, I don't think it's something that you want to jump in and buy right now. Okay, I still personally feel that in terms of crypto market side, it's probably like gold as well, right? It's just not gonna be moving impulsively. We're still in a range, in a corrective manner, and there are just so many different possibility of how price can develop from here. So I would strongly suggest you guys to just stay out from crypto right now. Okay, in terms of like price chart, is probably not the best time to go and touch it. Even Ethereum, okay, it's great, right? I'm seeing here over Ethereum right now. If you're looking at like short term, maybe 1 hour chart, okay, I'm liking what I see. Okay, some of you who have been following me on social media know recently there's this crypto game called XC Infinity that is very very popular. Okay, it's really flooding social media and then the crypto scene. It's very popular in the Philippines, right? And I know this game here has also helped many Filipinos to actually make some extra income from this crypto game, and the demand is definitely there. The hype is definitely right now there, and there is still risk, right? But over here, the game, just a very quick one, the game is actually back in terms of the currency that's being used behind it. It's actually Ethereum, which means that if you want to, the in-game currency, right, is actually back end using Ethereum, which means that if today you want to exchange or buy certain things from the marketplace in the game, you're actually using Ethereum. Okay, so over here, of course, then how much you're gonna spend, if you look at it from an investment perspective on that game, really then depends on the price point of Ethereum. Okay, and when I started doing the research over here, Ethereum was somewhere around 2400, which is $2,400, and right now it has dropped about 300, right? Which means it's pretty significant, right? Because if initially you need to use 1 ETH to actually get started in the game, 2 weeks back you needed 2004 US dollar. Okay, but right now with Ethereum at 2001, then you only need 2001 to get started, right? So that is actually, like, if you look at it, a $300 discount, right? So from me, of course, okay, what I'm looking out for is if Ethereum were to continue falling towards maybe $1,700, then I'll probably look to get started in that game. Okay, that is like, if Ethereum goes down, I'll start. If Ethereum doesn't go down, then I'll probably not touch that game, right? So that's where I'm looking at it. Okay, because to get started, I mean, of course, you can start in that game with a much lower cost. But for me, if I want to get in, I want to get in with a good starting hand. Okay, and that is of course definitely a little bit pricey, so I did some work to calculate and things like that. You need about, to get it started in the game for a good hand, okay, you probably need about 1 ETH in total. Okay, so that's where if it drops to 1007, then yeah, that would be good price point for me to get involved. Okay, yeah, but that's a little bit on that game. But overall, again, I want to share with you, if you're looking at ETH, then there's a good chance we're still looking at more downside from here. Okay, potentially back to 1,700. But it's not going to be 100%. This is just what I'm seeing in terms of that, right? In terms of the chart, in terms of ETH. Great. So other than that, if you're looking at some of the indices, okay, you might want to focus on the Hang Seng. Okay, just to show you some of the world indices over here. China. S&P is again making new highs, right? Last week. So I think overall, the stock market wise, everything is still rather bullish to me. Okay, but you need to be careful. It's not like last year, anything you buy is gonna rally. You need to be selective from now. You need to be a little bit more cautious, especially if we are getting closer towards like June 2022. You definitely need to be very, very careful. Okay, the closer we get to June 2022, the more careful you need to be, the more selective you need to be in terms of stock. Okay, why I say that is because you probably are also aware that in 2023 the Fed is looking to start maybe tapering, hiking rate. Okay, that would do quite a big impact on the stock market as well, right? Usually when interest rate rise, your stock market will tend to drop. Okay, and of course, a certain sector will be having a much greater impact on that, right? Like growth stocks, technology stocks, will probably see a bigger hit when interest rate starts to rally. Okay, so this is something you want to keep an eye on, but it's still not the time to kind of like sell off your stock portfolio and convert it into cash. However, I think it's something that you need to be aware of and be cautious, right? We are still bullish in the equities market, but take precaution. Okay, I think that's the word. In terms of Asia market, you know, I've always been sharing, be very cautious with China. I think it has still that potential to go lower from here. Okay, that's why I always say if you're looking at China market, just be very careful on that. Not only from a technical point of view, but you know, geopolitical, the fundamental of how the China market is being constructed. You just want to be very, very careful on that. Okay, if you just take a look like Alibaba, right? Case in point. Okay, you know, companies have been rallying, and this year we're still not seeing that that recovery yet. Okay, you know, companies are making highs or even recovering, but Alibaba is really not. Okay, if you just compare its you know, counterparty, right, not exactly the same but pretty similar in the industry, right? Look at Amazon over here, it's breaking highs. Okay, so of course, is it really just the fundamental of the company, or is it, you know, there's some political concern with Jack Ma, which, you know, came from all the way from Ant Group IPO, but that's what I meant by geopolitical, right? You just want to be very careful with that. Okay, so if today you really want to look into Asia market, I think maybe Hong Kong or Japan might be of interest to you. Okay, so looking at over here, you know, Hong Kong index might find the low here already, or it might not, but the idea is more or less we are already in this zone where it's actually a decent buy opportunity for the long run if you're looking at Hang Seng Index, right? Of course, you want to then look for an ETF over here. My view over here for Hang Seng, okay, is that of course you can see the upside potential, okay, is somewhere around from 25,900 to maybe about 23,400, which is the previous high. There's a good opportunity we can get that, and depending on how, of course, the market will still develop from here moving forward, it can even start to break new high and then continue higher. So if you're looking for some exposure in Asia, then you can focus on Hang Seng. Okay. The other one, of course, is then Nikkei, which is Japan. Okay. That is another one that you might want to keep an eye on. Okay. Same thing over here. You can see this is the pattern. This is on weekly, so it's larger time frame. But the pattern here is very clear. You get this impulse, you get a correction, you expect another high. Okay. Japan market, of course, you can contribute the move up. You know, some people would say that, oh, it's because of inflation in Japan, right? Yeah, you can say that, but obviously to us doesn't matter as long as the price is going up. I think as an investor, you make money. That's more important. Okay, so in terms of Asian market, these are the two that I'm personally monitoring. Japan and Hong Kong. Okay, you want to get some exposure into that. These are the two market you probably want to focus. Okay. Another one that perhaps just to quickly share with you my view over here, okay, is on the bond markets. Some of you are perhaps looking into it as well, maybe to hedge your risk, or even as a diversification in your portfolio. Okay, because a lot of investors will have what 60% equities, 40% bonds. Okay, just want to share with you. I might be wrong, but this is my personal view on bond market. It's not gonna likely go higher from here anymore. Okay, when I mean higher, it means that this high here, right? This high which was established back in 2020 August. Reason here is more of looking at interest rate and of course bond yield, right? This few things are correlated. Okay, bond yield, bond price, and of course the market interest rate. The Fed has basically kind of like exhausted almost their entire arsenal of toolkit that they can to stimulate the market. Okay, by playing around with the interest rate, we have reached like literally zero for the past recession and of course 2020 recession. So the idea here is that it will probably not go into negative, right? Hard to say, but I don't think the Fed is ready to go into negative yield. So with that said, okay, there will have a certain limitation of the bond market itself. Okay, so if you really take a look at the long term over here, okay, you can see the bond has been rallying a little bit, not a lot. Okay, together with interest rate falling, right? Because if you go and take a look at historical interest rate, it's in a downtrend. Okay, since where you can get the data, you look at it, it's definitely in a downtrend. Okay, so the idea here again, if interest rate cannot go any lower, then maybe your bond market would have kind of like limited upside as well. That's my personal opinion, right? So I just want to share with you that just be very careful if you're still thinking that bond is like the absolute safe haven. It's probably not moving forward from here, right? And therefore you want to be cautious onto it. I'm not saying that you don't want to invest into the bond market, but just be cautious, right? Be aware, and take precautionary kind of like steps to get to know a little bit more from all these different perspectives. Okay, and of course I can be wrong as well, right? Just wanted to let you know. Okay, yeah. So yep, that's my quick view on the market for the week. Okay, so I think we did cover a bit on the short-term side of things, the intraday, the swing trades, and of course the general market perspective as well. Okay, so I do hope giving you some different views and understanding of the market. Okay, so with that, maybe we'll open up the remaining time over here for you guys to ask questions and see if you guys have any particular thing you'd like to understand a bit more with regards to maybe trading, investing, or even let's say some of the perspective and views market. Okay, so just feel free to kind of like type it into the chat and then I'll be able to take a look at them. Yeah, great. Okay, so I see a question here. SPCE. I just don't suggest you to touch that. Okay, I think that's again. Yeah, these are what we call like hot potato stocks. Okay, things where it's just very trendy. Okay, but I won't touch it personally, right? So just don't touch it. Okay, okay, if you're looking at MPC, of course, this one here, I'm personally also involved in this. Again, you can take a look at it. Maybe looking for opportunity to get involved. depending on the scale of this, right? So if you're looking at it from a 4-hour time frame, then you might want to wait for a correction to develop before any entry point. Okay, this can easily form a double bottom before the push up here as well. Okay, but generally the direction as of now, from a technical point of view, is still looking upside. Okay, so this is my view on that. So I see another question over here asking for dollar. I think dollar, we did talk about it right at the start. Okay, I'm bearish for this week. Okay, at least based on what I'm seeing right now. But of course, things can change throughout the week, right? Tomorrow we do have core CPI and CPI that can change a little bit on how price move forward. Okay, but based on right now today, I'm actually bearish on the dollar for this week. Okay, yeah. So I see gold we did about it, right? The EURAUD we did that as well. Okay, silver, yeah. Okay, silver is actually a little bit cleaner than gold, but I wouldn't still touch silver, right? If you want, okay, if you are looking at this from a trade perspective, just pure tech, okay, pure technical. Silver has a good chance of this coming back down towards $21.85 region, but I'm not interested in selling silver, right? You know, I'm a little bit more on like the bullish camp, right? The bull camp for precious metal. Okay, you know, just like how Michael Burry, okay, is a perma bear. Okay? What it means on perma bear is like, every time he talks about something, he's always sharing that he's bearish on the market, right? That's what we call perma bear. Okay, he's permanently bearish. Okay, so for me, when I look at silver and gold, or I would say the precious metal market right now, I'm actually only interested in the bullish side of things. Okay, why I say that is not in the short term, but it's more of, you can see it as a potential inflationary hedge. You can see it as a potential hedge against maybe the upcoming market bubble, market crash, okay, where a lot of all this well-known popular investors are talking about, like Michael Burry is one of them, Robert Kiyosaki is another one, Stanley Druckenmiller is also saying that we are probably in the bubble right now. Even Ray Dalio also kind of gives some warning, right? So these are all big names. Okay, but again, doesn't mean that the market is gonna crash immediately. Okay, so I always say this these investors here, they have a bigger time horizon, right? They look at things maybe 6 months down the road, 1 year down the road. Okay, they are not looking at week to week, that's for sure. Okay, because of the funds they are managing, they are not gonna move funds within a week. Okay, so their horizon naturally is way longer. Okay, so I'm actually adopting, in terms of silver and gold, in terms of precious metal, I'm actually adopting that kind of process. Okay, so it's not a short-term thing, but again, it's not, you know, pulling things out of thin air. I just want you to show again what happened back in 2008, 2011 to 2011. Okay, you know, whether it's gonna repeat itself again, hard to say. But last financial crisis, we saw silver and gold make a major rally. Okay, we are halfway there. Okay, maybe another half is coming. I don't know. Maybe it's gonna come only like next year, maybe June onwards. Again, in terms of horizon here, we won't know exactly when. Okay, but to me, when I look at gold and silver, right, even though there's a short or sell opportunity, I will not sell it. Okay, because I'm not an active trader in the commodity side of things. I'm more of like investing and hedging my portfolio using commodities. So this trade here, I will not take it, right? I'm not that interested in the downside, but if you are, then of course it fits your plan, you can trade it, right, by all means. But if let's say it really comes back down to 21.85, then this will be an area that I will be interested to get involved in as a buyer. Okay, so yeah, that's my view on like precious metal side of things. Okay, so whenever I look at gold and silver, naturally I'm looking at it from a much longer time frame perspective. So if you're trading it, then you know you need to understand that whenever I share my views, you need to put them into context. What is the time frame I'm talking about? I think that's important to you, right? Because if I'm sharing with you over here, I'm buying gold and silver, then you think that you know that's gonna happen this week. Then you do not understand fully the big picture. Okay, so hope that clarifies certain things as well. Okay, good. Okay, so I see over here there's a question asking me to share more about price action. Now price action is really a very big topic. How to put it? Different traders kind of like categorize price action slightly differently. Okay, some give it very loose. Like to me, again, I look at names very loosely, right? Because at the end of the day, it's really just names, right? Terms, just terms. So price action, you know, some traders refer it to like candlestick. Okay, you look at pin bar, you look at engulfing bar, you look at doji bar, you know, inside bar. These are price action too. Some traders put that and take a look at price action in terms of like support and resistance as well. Okay, where price tends to, like, for example, reject here, and this is part of price action, right? Over here as well. Okay, some traders look at it in terms of like patterns. Okay, where for example you have this push down, you have this correction, so this is a pattern here. That is also price action, right? So these are all price action, right? If you ask me which one is it, all of them are price action. Essentially, if you're looking at the technical chart, what are you looking at? You're looking at price, okay? And yeah, basically anything that you're dealing with the technical chart here, to me, is price action. Okay, so having said that, there are just so many methods out there, so many strategies out there, so many indicators out there. You know, you need to, of course, if you're very new to all this, go and explore, go and try out different methods, different ways, and then from there, you will eventually slowly, right, start to figure out like which one fits you, which one you don't really like, which one aligns with you. Then from there, start to go and work deeper into the method, and then that will probably be the method that fits you. Okay, so there's no like holy grail over here. Okay, it's really a little bit of like trial and error, exploration. Go and understand a little bit, find out which one aligns with you, and then from there, a good match, then great. Yeah. Okay, so I see here there's a question also asking, is there any indicator to help confirm Elliott Wave? Not really. I mean, there are certain softwares out there that helps you to kind of plot wave count. You know, but at the end of the day, those are very rough way, right? The software is probably not going to be 100% accurate. There is a certain degree of accuracy. Okay, but at the end of the day, you probably still need to come in, you know, even with software, right? You know, I'm pretty sure you can find them just by doing a simple search. It's not free, you need to pay them. Okay, but I want to say that is, even with softwares that help you to kind of like maybe semi-plot, semi-automate the Elliott Wave count, you still need to make adjustment to it, right? In other words, you still need to be familiar with it, and then use that have like indicators or softwares to kind of help you only. Okay? It's not gonna replace your work. It's just gonna probably be like helping you. Okay, so yeah, so that's the idea of it. Okay, so yeah, I mean there is, but I personally don't really use it, and I probably won't encourage you to use it if you are someone who is still learning how to do Elliott Wave, because that software will probably not give you a lot of value. But of course, if today you're already you already know Elliott Wave a little bit here and there, okay, and you're looking at maybe a lot of charts, and you like to have kind of like an indicator or software to help you kind of plot it out, and then you make some minor adjustment to it, then those softwares will be great, okay, because then you don't need to start from scratch. You let the software do the preliminary work, and then you kind of come in and double check, make some adjustment along the way. Okay, so that then becomes helpful. Yeah, hope that helps. So we see here, some of you are asking pound dollar, right? Pound dollar over here, you know, depending on what time frame you want to look at. If again you're looking at short term, there is a good opportunity you want to look for a buy. Okay, but be very cautious because price has kind of like tested this high 2 times, which you can see over here on 1 hour. All right, mini double top formation pattern kind of thing. It's not one of the cleanest chart to really look at, okay, or I would say to focus at. But I'm looking at pound here, you know, 2 things that is fundamentally driving this. I wouldn't say fundamentally, but 2 factors, okay, 2 factors that's driving the pound dollar. One is potentially the weakness from DXY, right? So we talk about DXY over here, the weakness from DXY. The second is a little bit towards the pound or the UK side. Okay, this might not be the only factor, but the idea is more of like they're basically opening up their economy, right? And they're literally not giving so they basically say I don't care with COVID right now. Okay, you take care of yourself. We are gonna open up the economy. Okay, yeah, right. And probably this is, I don't know if this is the right move, but you know, UK Boris Johnson has, you know, since the start of COVID, he has always been the proponent of let's go for herd immunity, right? That's where the first time, you know, I kind of like get to know that term as well. So you know, that might be potentially driving UK up as well, because it might be a positive sentiment to the economy, but whether it's gonna be sustainable or not, hard to say. Okay, and that is kind of like the short-term positive sentiment for pound, right? And that's why you see quite a bit of the pound pairs are actually rallying, right? If you take a look at euro pound, you know, it kind of came down last week. If you look at some of the pound crosses, you can see they're kind of pushing up as well. Okay, so that is where that slight positive sentiment is also one of the mini factor here for pound. Okay, so in terms of that, you can definitely look for upside, but you know, this is a pair that I will not pay too much attention to if it's me. Yeah, it's just not that clear as of now, right? There are just so many possibilities of how price can develop into various patterns based on what we're seeing at this moment. Same thing for pound yen over here. Okay, yeah, you can look for the buy, but again, you probably want to be very patient on this. You want to give it time to develop something like that, because this can easily be that V shape here and then this comes down, right? So again, I want you to see pattern tends to repeat itself. Okay, what has happened over here can easily be duplicated over here, something like this, just maybe at a different scale. Okay, so the idea again is if you start to jump in and buy here, what happens if it just goes up a little bit and then it comes down like that? Okay, which is something here. Okay, so yeah, patterns repeat itself. The idea here is if you want to look for a buy, if you want to look for a trade, at least give it a couple of days to see this form, then you can take this up, right? Then that becomes a pattern that's super clear. Okay, but other than that, you probably will not have a trade that is worth the risk. Okay, so that's my view on that. Okay, euro pound is here. Okay, so euro pound again is just not a pair you want to focus on, right? If I look at daily here, I'm interested in the upside, but the 4 hour, I would say like right now it's just junk. Okay, this kind of chart, don't waste time on it. Okay, leave it, don't touch. Okay, yeah, so euro pound, just don't touch it, leave it aside. Okay, one of you asking about GA, pound Australia. Now pound Australia is a potential one that you can keep an eye on. Now if I were to focus on this pair, okay, I might maybe halfway through the week, if I see something that is decent, I'll probably add it into my watch list. However, at this moment here, I'm only interested in downside for pound AUD. Okay, I'm not interested in the buy, right? Yes, you might take a look here and say that, oh, but you know, the daily candle did break above this. Okay, but I'm not someone who just trade like break of support and resistance and then you jump into the buy or sell. Okay, for me, I look at it and ask myself, like, is this pattern a pattern that I can recognize? Yes, right? This is very obvious. It's a crawl. It's happening at this top here, so maybe a double top. Okay, because a crawl pattern usually suggests reversal. So yeah, that's where I'm interested, only in the downside for pound AUD. Okay, but there's no setup right now. Okay, so direction wise, it's quite clear where I'm gonna look at. But in terms of like this week, whether we're gonna get a trade or not, still very difficult to say. Okay, so if you're looking at pound AUD, I would suggest maybe the direction you want to focus is on the downside. Okay, and then see if there's a setup, there's a strategy that fits for you to take a buy, a sell trade. Okay, good. Okay, so I see one of you are asking about ARK. Don't touch ARK, right? I think Katie Wood flare is probably gone. Again, some of those hot potatoes have like trending stuff and then that's it, right? It dies down. Actually, ARK I've been sharing and kind of like telling people, just be very careful, because why? How the majority of people think is predictable. Okay, when I mean predictable is, ARK became very, very popular last year. Why? Because of the technology boom, the stocks, the technological stocks boom, some of the stocks, penny stocks even, that ARK invested in it, last year, basically anything you buy just boom, right? And they beat a lot of benchmarks out there. Okay, and they're able to do that. Why? Is also because their funds, compared to some of the bigger ones out there, are relatively smaller. Okay, and you need to understand, with a smaller funds, it's easier for you to move into different markets fairly quickly, and your return would naturally be higher, right? It's easier to beat benchmark if your portfolio is smaller compared to, like, let's say Warren Buffett portfolio, okay, or even Ray Dalio's portfolio, right? Theirs is huge, so it's not so easy to gain huge alpha out of the market. But if you take a look at that, right, this year you can see the S&P, the Nasdaq, has already broke highs, but ARK Invest has yet to break highs. Okay, and that is something that you want to take note of, which means that, again, their portfolio is probably not doing as well as compared to the stock market as a general. So how, just now I mentioned, right, you need to take a step back and really understand how the majority of the investors think. Okay, they're always gonna be late in the game. Okay, what I mean by this, always gonna be late. Majority of the investors are gonna be only aware of something when the news reports it. Okay, and when I mean the news reported it, the keyword is reported, right? It's not a forecast, it's a report, which means it has already happened and the news announced it. And that's where majority of the public would then only get to know about it, and then they get excited about it, and then they jump in. Okay, by then, things has already been done. Okay, so take a look of this, right? I think ARK here is a very, very good case study. Okay, I'm not saying that they're not going to break new high, but I'm just saying that what happened this year alone is a very good case study for you to reference to. Now, if I bring you back to, like, this white line here is the transition from last year to this year. Okay, so if you take a look at that, 2020 is a huge year for ARK Invest, right? Just one way up, right? Very, very strong performance. And then this is where ARK became very popular this year. Okay, and that's where majority of people starts to pile in, right? Of course, there are some who started to come in earlier, but majority of them will probably come in like late 2020 or even early 2021. Okay, and this is what the retailers can do in the market. Okay, they can still push it up a little bit, but if the big players are not there, this is what's going to happen, a correction phase. Okay, so that's the part where you want to be aware. When you read something off the news, it's probably a report, it's probably done. Okay, and if you want to jump in, then just be very careful of that. Okay, so to me, I will not touch ARK, okay, at all. Okay, that's my personal preference. I do not have anything against Katie Wood or ARK Invest, but it's just that I don't really align with her style of picking stocks. Okay, I'm not aligned with her style of how she is kind of like managing her portfolio. Okay, so it's just basically not my style, right? And therefore I would not invest in ARK because there's a disalignment. Okay. Yeah, but having said that, it does not mean that it's a bad stock or a bad ETF, but it's just you need to understand the game. You need to have all this, right? You need to have your thesis. You need to know what are you investing, why are you investing, and if you're following an ETF, you need to then of course understand what is the principle, what's the philosophy of this ETF, does it fit you, okay? Yeah, but if basically you're jumping into ARK here because of Katie Wood, because of how the news is, or because of the hype, then don't do it. Yeah, so that's on it. Pumpcat. Okay, so Pumpcat, we are looking at upside. Okay, but there is no setup for me, right? I think there's a good chance this will just keep going higher towards like 7585, which is where the previous high is. But if you look at a 4-hour time frame, it's just basically very choppy, right? You know, if you look at the chart and you see something like that, okay, or even here, usually I would kind of suggest just stay out of it. Okay. Yeah, you know, hindsight you can say, oh, if I buy here, you know, this is good profit. But honestly, if you buy here, okay, this push up, you probably would have thrown a little bit of stop. This comes down, you probably get out here. That's it. Okay. And then after that, you try to maybe buy here again. Okay, and then you get panicked a little bit, goes up a little bit, you probably get out here already. Okay. So whenever you see a chart like that, usually it's not ideal for trading at all. Okay, hindsight is always easy, but when we're moving forward over here, whenever you start to see something like that, just stay out of it. Okay? It's not gonna be easy for you to manage that trade anyway. Okay, yeah. Hope that's clear. Great. Okay, so hope you guys actually benefited from today's sharing. I see over here Mark says thank you for speaking English. Yeah, you probably saw or kind of like join in for my other sharing, okay? Because over here I do 2 sessions per week, right? One is English, one is in Mandarin and Chinese. So Monday we do it in English, and then Thursday we do it in Chinese, right? So it's really to just serve different community. Okay? So of course, if you like to kind of join in English, then join us on Monday, right? We do this every week on Monday. Okay. Of course, some weeks maybe no. But as of now, tentatively every week we do have it. Okay. Great. Yeah, so yeah, hope today's session over here give you some insights, help you to prepare a little bit in for this week's market. Okay, yeah, so if you enjoy something like that, you know, feel free to just share this opportunity with your friends. Okay, invite them to jump in, join us on you know, every Monday. Okay, and hopefully we'll be able to also help out and share with more traders and investors. Yeah, so that's all from my side for today. All the best for you guys, and we'll see you guys next week, Monday again. Okay, all the best. Bye bye.